This stock just exploded nearly 50% in a single day, and almost nobody was ready for it. Silicon Laboratories just went from the low 130s to over $200 like it flipped a switch. No hype cycle, no slow breakout, just a vertical move that ripped straight through years of resistance. And here's the part that should really get your attention. This exact type of move has shown up on this chart before, and every single time it completely changed the trend that followed. So the big question now is simple: is this the start of a whole new leg higher, or is this one of those emotional blow off moves that traps late buyers at the top? Let's slow this down and actually walk through what the chart is telling us. The ticker is Silicon Laboratories, trading on the Nasdaq. As of the most recent daily stock around $203 after printing a massive green candle with a gain of roughly $66 in one session, which works out to about a 48% move. Volume absolutely exploded, coming in at over 6 million shares, which is multiples of its normal daily activity. That alone tells us institutions were involved here. This was not retail chasing a small cap, this was real money stepping in aggressively. Quick disclaimer before we go further: this is not financial advice, this is purely technical analysis of the daily chart. Always manage your risk and do your own homework. Now let's zoom out and look at the bigger picture, because this move didn't happen in a vacuum. Going all the way back to 2020, Silicon Labs was in a steady uptrend, grinding higher with higher highs and higher lows. That trend accelerated into 2021, where the stock went on a powerful run that eventually topped out in the low 200s. That area around $200 to $210 became a major long-term resistance zone. You can see price get rejected there hard, followed by a deep multi-month downtrend. From late 2021 through most of 2022, this stock was in pure damage control mode, lower highs, lower lows, and price living under its key moving averages. The 50-day EMA rolled over, the 200-day EMA rolled over, and rallies kept failing into those levels. That's classic bear market behavior. Then something started to change in late 2022 and early 2023. Price stopped making lower lows and began basing. The stock reclaimed the 50-day EMA first, then started testing the 200-day EMA. We saw a couple of strong rallies, but each time price failed before it could break back into that old $200 resistance area. That told us sellers were still very active up there. Fast forward into 2024 and most of 2025, and Silicon Labs basically went sideways. Choppy price action, wide swings, but no real trend. This was a long consolidation range, roughly between $100 on the downside and about $150 to $160 on the upside. During this entire period, the 50-day and 200-day EMS flattened out, showing balance between buyers and sellers. And that's what makes this latest move so important. Coming into this week, price was sitting around the low 130s, just above both the 50-day EMA at roughly $142 and the 200-day EMA around $134. Those moving averages were acting as a compression zone. Price was coiling. Then the earnings catalyst hit. On the daily chart, we see a massive gap up, a huge range candle, and a close near the highs of the day. That is critical. This was not a gap and fade. Buyers stayed in control all session. The stock didn't just break above short-term resistance, it completely erased multiple years of overhead supply in one day. From a technical perspective, this candle alone changes the entire structure of the chart. First, price is now far above both the 50-day and 200-day EMAs. That immediately shifts the long-term trend back to bullish. Second, the stock has reclaimed the $200 level, which previously acted as a major rejection zone. When a stock clears a level that strong with this kind of volume, it usually doesn't come back to it immediately. Now let's talk key levels, because this is where the real decisions get made. On the upside, the most obvious resistance is psychological: $225, then $250. These are round numbers, and you can see thin price action between here and those levels. If momentum continues, price could travel quickly through this zone because there's not much historical trading activity to slow it down. On the downside, the most important level to watch is the gap area, roughly between $175 and $185. Gaps like this often act as support on the first pullback. If buyers defend that zone, it would be a very bullish sign. Below that, the next major support is around $150, which was the top of the prior consolidation range. If price were to lose that level, it would suggest this move was more of a temporary repricing than a sustainable breakout. Volume is the final piece of the puzzle here. This was the highest volume day in years. That confirms participation, but it also means Emotions are high when you see moves like this. The risk is not missing out, the risk is chasing after the easy part of the move is already done. So let's talk scenarios. In the bullish case, price consolidates above $200, volume cools off, and the stock forms a tight flag or range over the next few weeks. That would allow moving averages to catch up and create a launchpad for a continuation toward $250 or higher. In the bearish case, price fails to hold 200, sellers step in, and the stock starts filling the gap aggressively. If that happens on heavy volume, it would signal this move was more of an earnings reaction than a trend change. My personal take is simple. I am not chasing a 48% daily candle. I want to see how this stock behaves after the excitement fades. Does it hold key levels or does it give everything back? The reaction over the next 5 to 10 trading days will tell us far more than the candle itself. The big lesson here is patience. Explosive moves feel urgent, but the best trades usually come after the dust settles. Let the chart prove itself. If you found this breakdown helpful, hit the like button, subscribe for more chart based analysis like this, and let me know in the comments whether you think Silicon Labs is starting a new trend or setting a trap for late buyers.